CTM. What's going on, everyone? Happy Monday. I hope you all doing well and had a really good weekend. I'm so ready for today's session. So much to talk about. Looking forward to it. It's the perfect timing as we've seen what we're seeing unfold today with the Yuan coming off. So the title that I have prepared for today's session, it's if the markets crash, this is what will happen. And in this video today, I'm going to discuss first the bear market of 2000 and of 2008, the crisis of 2020, but most importantly, the time in between, this time that is not too often talked about, the longest bull market in history from 2008 up until present time, right over here. Now, the Nasdaq has traded off 20% from its all-time high. That is bear market territory. Between a 10% correction and a 20% correction is considered a correction, a technical correction. Once you reach 20% off the all-time high, that's considered you have entered a bear market. But we're going to be taking a look at, we're going to be starting with the Nasdaq, and then we're going to look at the Japanese stock market, the Nikki, and the Venezuelan stock market there during their currency debasement. Everyone knows it as the hyperinflation, right? That's what was happening, was the currency was completely debased. Is that potentially going to be happening with fiat currencies? Are we looking at that happening with something perhaps or potentially first, like the Japanese yen or the euro? We're going to take a look at how markets responded back then, what we could expect and how we could expect them to respond now in relation to where we are on that timeline. Yeah, we're going to be looking at how equity markets responded during that time and how they're responding now. And finally, we're going to look at how risk reacts during periods of Yuan devaluation. Today, you could see in the energy markets, whether you're looking at crude, the gold market, the Yuan coming off, being devalued, you could see those prices are coming down. We're going to talk about that. We're going to talk about what happened on August 2015 that caused Bitcoin to put in a bottom. That was during the last Yuan devaluation, right? And at the end of this video, we're also going to be taking a look at current price structure and outlook on Bitcoin. Please make sure to smash the like button as we get started today. I really appreciate it. It really helps the channel. By the way, this is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. That's right, Alpha. We see the VIX also, by the way, right? Look at this, into resistance. Not only the VIX, we're seeing, and we've been looking for it since last week, that trend line break on yields on the 10-year is actually in play right now. And I expected because of that we would actually be seeing risk kind of bounce, get a reprieve. The yields have been pressuring all risk markets since 2022. Now that we're getting this big trend line break, that's a big tell. We're going to look at it all. Let me just start over here with you, looking right now at the Nasdaq. I'm only looking at it from the 2000.com bubble burst, the bear market, right? I'm looking over here with you today at what happened in 2008 after price took out that first initial bounce, making that lower low. Is price getting ready right now on the Nasdaq, on the S&P 500 to take out their March lows? And if that happens, what does that mean? What should we expect? We'll take a quick look at the 2020. These are the periods that I've traded through in my career. And because of being able to learn to trade, when I started learning to trade and then moving on to trading full time, that was during a bear market. And then after that bear market, we went for basically 10 years in a pretty defined range going nowhere, learning to trade in an environment where price is not expected only to go up, right? But, you could expect anything, and it could be sideways price action and or up and down opportunity. I think it's an enormous, you get lucky. You get lucky at the time you're born. Some could say Warren Buffett really, let's say, profited from just his circumstance. My uncle, by the way, retired. He had two newspaper routes. That's all he did. Out in New York City, he was able to retire at a relatively young age. He just bought stocks and held them. Warren Buffett. But anyway, here we are. I want to take a look at the Nasdaq, and right now, what's going on is that you can see that currently price here is getting ready to test the March lows. Now, coming into this March lows, this is a very important. This is a very important time. I don't want to get off the 2 week. Let me stay on the 2 week as I describe it, even though it's, I would rather be on a swing trading time frame. Let's just do it. Let me jump down to a daily time frame with you really quick. You can see this area over here. This is when the Fed began their first rate hike, and we saw this 20% correction coming into that rate hike, right? Now, normally at 23%, normally, historically, into that first rate hiking cycle, you see volatility. Now, the correction doesn't always happen going into it, but because it happened going into it this time, sometimes it happens around the time, so shortly thereafter, around the time of that first rate hike. But because we had corrected already into bear market 20% coming into that first rate hike, right? And also because this was like peak war, this was like peak uncertainty and fear of what was going to happen next with the war, right? On this, I thought and became and continued to be bullish in this area over here. The fear in the market around this particular time, it reminded me a lot of what I saw in April, May, and June of 2020, where people were looking for the markets to crash after they had already crashed, and they were looking for some type of insolvency event. And yes, that could happen. That for sure that could happen. I would get really worried or begin to get worried, as you know, since I've told you all since the beginning of this correction into here. If we take out these lows, what then can we expect? To take a look at that, we're going to start with, and we will look at the Nikki, we'll look at the Venezuelan stock market, but I want to start on the Nasdaq itself. And I just want to come to that last bear market, that first bear market that I learned to trade in. And by the way, if you had like the TA skills that we develop here in conquering the markets, and you took the most possible out of that bear market, you're looking at 63%. I mean, it's more than 50%. It's a fantastic trade. By the way, there were a couple of, sell the rips. There's one over here, and then one more main sell the rip, right? Sorry about that. Now, I wasn't myself. I was learning to day trade during this period over here. I was trading the E-mini futures. I was trading individual stocks. I wasn't capitalizing on this whole big move down. I was learning about the markets, and in a big way. Now, looking back with CTM, you could also say, someone could say, well, that's an 83% drawdown. Yeah, from top to bottom, that's an 83% drawdown. I think that if you're the best of the best, you could have probably taken 60% out of there and 2 nice waves down. That would have been beautiful. By the way, this is all set up, right? Here's the initial volatility off of the all-time high. It was a lot bigger here. I'm gonna go with, because we're on the 2 week, I'm gonna go with 56%. Sorry about that. I want to come back down to as we're talking about an individual period over here, what happened during the 2000 .com bubble crash. I want to just get it. There we go. This is a little bit easier to see. And this is what's happened here since, December in stocks, December 2022, into where we are in here, March. We had this drawdown, which this in real time is 23%. Back here during the .com bubble and bust, that was a 40% correction. Where I get worried would be if we take out that low, right? When we took out the low over here, that's when price began making those multiple legs down. Now, 2008 is a little bit of a different of a situation in so much that is, and here we're looking at the Nasdaq. This plays out a little bit different on the S&P 500, but we will look at that as well. You see, once price gets down 25% from the all-time high, we just saw a 23% correction, very much in line, and then price bounced. And I was looking for that bounce, occurring in real time. It's been faded a lot quicker than I presumed it would be. I thought it might carry out actually even a couple of months. But here it is all of a sudden faded back down, and we're testing that bottom area over here. And again, if we break that area, if we take out the lows, that's when I think that we could put in at least a leg down. In 2008, it was a gigantic big leg down, but only one. It was only one leg down compared to in 2000, .com bubble bust. That was lasting years, and that was multiple legs down. And here we are in real time, and I just want you to see what that looks like. Again, there was the bounce, and again, it's so funny. Things seem to be speeding up. Going back to that 2008 crisis when they went in and they bailed out the banksters, ever since then, the destruction of the money supply and the cycles within seem to be speeding up. But you could see that the initial bounce and back down. What happens here is really important. And as everyone knows, since January, if not before, but since January 2022, we have been saying I am cautiously optimistic. Well, to be fair, it was ever since the break of $53,000. And since then, I've been cautious and at times cautiously optimistic. If we break down below here, we went from a technical breakout to a breakdown. And at that point, in light of current Fed policy, which is tightening, I have to be cautious. There's no question about that. What it will look like, we could look at a couple of different examples. We just did. We looked at what happened in 2000 and we looked at 2008 when the Nasdaq went ahead and took out that swing low. Are we potentially looking for some type of big follow through to the downside if price takes out that low? I would highly recommend being prepared for it. I know that that's something that I've been saying as we're close to it today. Now, today was also pivotal. We'll talk about the Yuan's devaluation and what that may or may not mean going forward. You see the Japanese yen is also bid today. There was lots of talk that the Chinese were going to need to devalue because of the yen weakness. Now, what's funny in most of the crises that I lived through, talking about those two. By the way, if you're here, if you're new, please go ahead and take a second to subscribe. And everyone else, please smash that like button. Really appreciate that very much. Whatever we were just talking about was good, but at that point, you need to keep going and talk about what is next. Oh, the Yuan devaluation. Is that potentially here going to put in a bottom? Is this breakout retest into this area of support now potentially going to hold as support? And we just put in a higher, very much on the table and possible. I am right now, and I have been during this initial stretch down, this correction, which, in the equity markets, for sure, it's something we were looking at when we did our work into the beginning of the rate hiking cycle, whether or not it happened before, at, or slightly after. Around that time, looking for that correction, and then looking for risk to kind of head and recover. And I don't think to recover where it did. I thought it was going to recover a little bit more and for a prolonged period of time, even if we were going to see further downside correction. And now we're at a pivotal point where that could be unfolding, right? We're into support. We expect the support to hold until it breaks. If it breaks, that's potentially setting up a big leg down. What I want to focus in on next, though, is what happened over here back on the 2-week time frame. Is that it was in 1989, the 80s. At the end of the 80s, during that period, the Japanese economy was booming, booming, booming. There's a documentary on YouTube. You write it down if you want to go ahead and watch it. It's called Masters of the Yen. Is that correct? Doesn't sound right. If someone knows the documentary that I'm talking about, please go ahead and include it in the comments, or I'll include that link in the comments for you. Great video. And then you could see over here, this is when the bubble burst, right? This is February 1990. And then we could talk about you have that initial reaction down and then the bounce. And then over here, you could see price making multiple legs lower. It looks a lot more like what happened in the dot-com bubble burst, but the market never recovered. Only today, as you're seeing the Yuan devalued, and we're seeing that major Yuan weakness right now, which again, potentially is what caused the Chinese to have to go ahead and devalue the Yuan. What do you expect happens from here? Was that enough? Do you think that we now have a floor in the Japanese yen, or will we continue to see further devaluation of the Japanese yen, and that means that we will need further devaluations of the Yuan from the Chinese? By the way, just let me skip over. Really, just so interesting. We're going to get to it in a little bit further down, but it's so interesting to see the market's reaction to that devaluation of the Yuan. You're seeing oil, energy trading off, and you're seeing gold and precious metals trading off. We've been talking about here, partly and maybe mostly led by the brilliant mind of Luke Roman, talking about how China is working towards pricing these assets in the Yuan, and you could see that today as the devaluation takes place and those prices coming down. All very, very, very interesting. I wanted to talk about or look at the Nikki during this period of time because it took so long for it to recover. A lot of people right now are talking deflationary spiral, doom and gloom, like the bull run is over. And I think that we should talk about what the worst case scenario would be and what that looks like. It's why I often bring up the Nikki inside CTM. And you know what? We'll take a look at it another time. The next thing that I was looking at, again, reading up on what happened, specifically when things started to really lose control, which was towards that mid 2000s into 2010. I was looking at things like what was going on with inflation during that period. And you could see that like in 2008, right? This is when the crisis really comes to like a halt. And look what's happening now, right? You could see in 2008 that sharp increase. Are we seeing a sharp increase in inflation taking place right now? And has it probably peaked? You know that I've been talking for the last couple of weeks here, how potentially we're looking at like a peak in inflationary pressures and prices. And then like, we don't ever recover, but we do go, sideways to down before the next big impulse. And that's what we talk about over here is the next time that we look at that expansion of the balance sheet, we're going to go from a plateau to like the next leg up. And here's a really good visualization of that. Here you can see it taking place on food as well. Lots of people are worried about that. The IBVC, Jan, but could anyone pull it up on TradingView? And if you could, just go ahead and get me a link, right? Send me the link so I could pull it up. I'm really having trouble pulling it up. This should be the correct symbol. It's almost as if they have hidden what happened for good reason, with good reason. And you can see that the currency crisis didn't start over here. This is in 2009, 2012. Like that area we're looking at. No, the crisis started well before, similar to what's taking place, whether you're looking at worldwide, Japan, Europe, or even in the United States. I guess what I'm trying to say is these things we talk about like, at first gradually and then suddenly. And this is something to keep an eye on over here. And over here in this period, even though this looks like really small and consolidating, these are big swings. These are big swings that are taking place, as you see right now, even on Bitcoin itself. Pay attention to what happens next. Here's the look at the Venezuelan money supply, M2. You're banned from TradingView now, too. Right, Dave? The bots are against me for sure. They want to suppress it. No, Alpha Mike, it's you too. Yeah, I can't. It's okay. I wish, and if anyone at any point could get me, obviously, a chart of the Venezuelan stock market, I would greatly appreciate it. I would love to go off on it, but we could focus here on the money supply. And you can see here in the US, the M2, like at first gradually, we didn't get to the end suddenly place. By the way, we did have, ever since that massive expansion, right, a 42% increase in the money supply in the last 2 years. If you looked at when that happened in Venezuela, well, Jordan, that's a 453%. That's true. That might have happened much later towards the end of the crisis. I don't think we're towards the end of the crisis yet, but you could see over here, like something like that. Well, that's also a 50% increase of the money supply like we just saw here. You think inflation's out of control? I think they're just getting started. Well, they're going to pull back on quantitative tightening, which is going to cause the next massive expansion of the balance sheet. It is a Ponzi. They do need to keep it going. They can taper it. They could even raise rates, tighten it, and pull away liquidity. But then you come to a point in time where things break. At that point, it's a decision. Do we go through some type of like spiral deflationary environment and crush civilization? Or are we going to go ahead and kick the can down the road again and simply inflate it away? You could take a look at what happened ahead of us in Venezuela. Again, this is more like, or seems to be a little bit more like or similar to where the US is at on this timeline. And then whenever you could say like, well, here's the next expansion or QE program. And eventually, I think it's going to lead us toward a place where the only way to keep it going, to keep the music on, becomes massive expansions. And look at this. You thought that 453% increase was something? Check out what happened next, right? This is hyperinflation. And whether or not this happens in the US or in any other major economy of the world, I have no idea. I want to be prepared for everything, but it certainly seems like we're headed in this direction, and it's nice to be able to look at places and markets that have been there before to get some type of awareness of what happens next. And I want to bring that awareness towards us right now because we are currently at a pivotal point where if we make a leg down in the markets, we might be looking at actually entering a bear market. Now, I know that technically down 22%, we met the qualification for a bear market. At the same time, we've seen those type of corrections occur many times during this bull market. I'm coming back over here to December 2018. This was, by the way, very easy to play. This was Jerome Powell, verbal pivot, put a bottom in Bitcoin, and the president of the United States at the time saying this looks like a really good time to buy stocks. It required a phone call from the U.S. Treasury Secretary, Mnuchin at the time, calling up the biggest banksters and coordinating, but they did, right? And the markets were down 22%. Markets now down 22%. We all know what it was like to trade through the COVID crisis. Markets off then 27%. We've seen these big corrections occur before. Over here, here's a prolonged one, 16%. And that makes the point that we've seen these big corrections along the way. And it doesn't necessarily mean that we're looking at some type of like 83% correction that we saw on the Nasdaq from top to bottom during the dot-com bubble burst. Just go ahead and move that over here. And 83%, right? Taking us down towards Nasdaq 2600, and it's possible. It's definitely possible. Keep in mind, if we went back towards the bottom of the COVID levels at this point, we're looking at Nasdaq 74.50. Keep that number in mind right now because we're going to need to look at something. This was Thursday session, right? All big periods of a weaker Yuan. We're looking at a weak Yuan today, beginning to be devalued, has led to the SPX, the S&P 500, moving to the downside. That's an interesting comment. I have to pick that up with you today as we are looking. By the way, this was pulled up here last week ahead of the devaluation that's taking place right now in the Yuan, was preparing, continuing to make sure that we prepare. I want to get to the Yuan, and I want to get to the devaluation taking place. I think we started this off. Where's my chart? Hold on one second. Let me make sure I have it because it's a good one, and it takes us further. We got a lot to cover over here. Here it is right here. And I'll just briefly mention that in each period of Yuan devaluation, here you can see the Yuan devaluing. Here's that date I talked about, August 2015, where the Chinese government did that first of 3 devaluations. We're seeing potentially one taking place tonight, again, to catch up with the yen. In the past, every time it's happened, you've looked at the S&P 500 trade higher, right? Now, by the way, once the Yuan finishes devaluing, then you really see a strong move up in equity prices. But nevertheless, if you even look at this devaluation, another 12% devaluation that took place between, this was 2018 and 2020, the crisis, equity markets also trading up on that. Always, take everything, use it as a vantage point to help form your own views and come to your own conclusions. I've been looking forward and been talking about the fate of the market currently rests on, when I talk about market, I'm talking right now about the equity markets. I'm talking about the indexes, the Nasdaq and S&P 500, and it comes down to earnings and valuation. Right before I said, take a look at the Nasdaq at 7,400, and then if it crashed at 2,600, right? Now keep in mind, these are S&P valuations, but at 2,500, S&P 500 is currently that would be a 10x PE to ratio. Right now, we're currently trading at something closer to a 18x, 20x. Today, this week, we have major tech earnings. We got the giants. This is a week that is very important and pivotal for markets. If the markets are going to continue to either trade sideways to slightly up, the earnings are going to need to be there in order to justify that. We're looking at so far weekly revisions have turned slightly negative, but this is not anything on the scale of what has accompanied past reversions. Things were kind of priced to perfection. And you could still see, though, so far during this quarter, we're looking at earnings actually moving higher. So the earnings might be there. Where else are you going to put your money? That's the questions right now that investors need to be asking themselves. By the way, if you're looking at, we're in the part of the cycle of the Fed tightening in which earnings growth decelerate, why valuation multiples also compress. It suggests a muted outlook for equities for a while. We've been talking about base case sideways, not unlike 1994. Two questions. What happened after 1994? What happened during 1994? And where are we right now in this current correction? If I look back to that correction we saw that we talked about here, the December correction into 2018, where the Fed pivoted and put a bottom in Bitcoin, you could see that valuations were similar to as they are right now, right? And also as they were over here after the 2020 correction. Nope, that was flip-flopped. Sorry about that. That's just inverse. Forget that. But back to where we were back during that December 2018 correction. Are we potentially here getting ready to put in a bottom and continue up? I mean, until we take out those lows, that's my base case. I asked you to keep in mind really quick over here, this number 2,500. If we were to see a reversion all the way back to 10x PE and boom. Right, 2,500, you're talking about almost a 50% correction for that to take place. That would take us back towards valuations towards the peak of the crisis. Is that your worst case? Do you think that is going to happen? Are you thinking that right now? Are you calling for that 83% correction like that we saw back at the top of the dot-com bubble bust? A lot of people are. They're calling this like some type of super bubble, and they're calling for this type of correction to take place. Now, I don't know if that happens or not. It could happen, but I think right now, I'm going to lean in my TA skills. I'm going to lean in on my macro skills. I'm going to lean on my knowledge of the markets and how to do research, and know that while we're above this low, I'm not so worried that we're going into a deeper correction. If we take that out at that point, very much so, laser eyes would come off, and I would be a lot more worried. We've seen or we hear a lot of analysts talking about the bottom of Bitcoin is in, and they're doing that in relation to the S&P 500. I think that you could, the Bitcoin only trades back so far, and it doesn't trade back into what happened in 2008. And it doesn't trade back into what happened in 2000 when that lower swing low was taken out and we went down for further side correction, right? So you can't rely just on this. It's great awareness. Love the situational awareness. I hope that we put in a bottom over here. For sure, we're looking very oversold, and it would make sense for a recovery, even in light of what we're seeing unfold around us with the Federal Reserve tightening the world. Nevertheless, be aware or be cautious. We might actually see that lower low taken out, and we didn't see that back since 2000 and in this area 2008. What that can mean for Bitcoin, I think that should be on everyone's mind right now. This, by the way, before we get to that, we're going to talk about what that means for Bitcoin. This is something we've been lining up since last week. We're talking about the 10-year coming into a very interesting area, almost going parabolic into it. And then we lined up that trend line for the sell impulse. And we said we want to see what happens if we get the sell impulse. What we want to see happen, this might be the time actually to buy bonds and wear diamonds. But if we get a sharp waterfall down, that would be a good tell. But if we see this bid up, right, and then reverse, that's also an equally strong signal that we should see a continued sell-off of the bond market and inflation continuing to run high and hard. So pay attention to what's going on right now in the markets. It's all relevant across everywhere, right? Bringing us back up to what's happening right now with the Yuan, right? Probably the biggest thing happening in the markets. You notice that 10-year yields coming off at the same time. Because of the Yuan devaluation, are you seeing a flight into safety, a flight into U.S. bond markets? It looks like what's happening over here. It's also, by the way, causing, right? I think I have it pulled up next over here. It's showing in the energy and gold markets today. Oil and gold down as the Yuan is coming off. Here we have TXMC showing the energy select sector, XLE, and you could see energy coming off. This reinforces the importance and point being made about that shift to commodities being and other things being priced outside of dollars in a bigger way. This was very, very interesting. Do I have you with me? If you're here and you want to keep going here, we're about 40 minutes in. Let me know. I'm ready to keep going to get into some interesting stuff as we continue here on this live session. Just a gentle reminder again, it really, really helps the channel when you go ahead and take a second and smash the like button. Jerome Powell, did you see him speak? This was on Friday. I found it off Zero Hedge, by the way, and it was just titled, right, The State of the Global Economy. And it was Powell sitting down with Christine Lagarde, the head of the ECB. And then also, by the way, I'm watching this and I'm listening to, let me just show you, like, you got,
position.
let me show you the table. You got Christine Lagarde over here. You got Jerome Powell over here, right? Now, it's not often you see Jerome Powell and Christine Lagarde speaking at an event like this. So I'm like, what's going on? Oh, they got like the CNBC anchors out there. This is a production. And then the person that did most of the talking, because these two talked very little. All they basically said was that that Jerome's the smartest guy, and I'm so happy to be his peer, but this person in the middle did a lot of talking. I wasn't familiar who she was, but I was noticing that you're seeing her do a lot of the talking, and I found that to be odd when two of the world's most powerful central bankers are on this panel with her. It turns out she's newly elected director of the IMF. This thread, let me include it in the comments because it's absolutely worthy of your time and attention. It talks about how that she began discussing, right, which is rare in itself for a spokesperson from the IMF institutions. She was talking about the exploding government debt levels, the largest increases since World War II, and how the current spiking of rates are putting many countries in a pinch. Yes, the US is tightening, but it's tightening the world at the same time. And she goes on to say that we're looking at sovereign bond defaults. Now, many people assume she's talking about emerging markets and perhaps and potentially, yes, this is correct. We saw even last week, Sri Lanka defaulting on their debt. It's already happening. But at the same time, I had to wonder, why is she bookmarked between Jerome Powell and Christine Lagarde? And why is she doing all the talk? I'm wondering if potentially they are setting up, getting people prepared for not just an emerging market sovereign default, but maybe one of the, maybe Japan, maybe Europe. Who knows? Who knows? It's crazy out there. Thank you, Zach. So good stuff over there. By the way, they generally get these forecasts wrong. They're very, right now they're forecasting QT, right? Quantitative tightening, pulling away that liquidity. And this is where they're hoping to and expecting to get to within 2 years. Now, I've never seen, first of all, a government agency, the Federal Reserve, or even an investment bank get close on their estimates to what happens in real time. So be aware. But this is what they're hoping to do. They're hoping to go this far. A lot of people are very concerned right now. I don't know how far they're going to get. I don't think they're going to get very far, personally, before they go ahead and pivot. A lot of people looking for that potential capitulation of things breaking because they need to pivot. Are those people on the right side or the wrong side of the trade? That's the question that needs to be asked, and you should be asking yourself. This was the headlines I saw this morning, right? I saw gold tumbling below 1900, and I thought to myself, well, that's kind of taking out the war premium that we're seeing. And then I noticed, well, the war's still going on, and we're not seeing any signs of de-escalation. That doesn't make sense. It wasn't until later in the morning that I was really thinking about the Yuan devaluation, how we're talking and ever looking increasing, seeing rubles tied to gold. The Yuan, is it becoming tied to energy and gold? Those are questions that we need to be asking ourselves right now. I want to end with this part as I end and begin. right? That it was during the dot-com busts and ensuing bear market that I made, anyway, I don't want to talk about that right now. Here, let's go about this. This is my point. We aren't in a bear market. Nasdaq reached qualification of a 20% drawdown from the all-time high, and S&P 500 is close to a 10% correction, and the markets are not crashing. If either happens, I expect and hope to be on the right side, as I've been in the past. This takes us over here right now to this very important piece. Cautiously and at times cautiously optimistic into the Fed's tightening. Now is the time to build reserves. You've heard this here for the last 4 months. Nothing has changed as far as I believe this is a time in light of the current Fed policy to just be looking to build reserves. I assume everyone is fully positioned into Bitcoin. For me, myself, it's over 90% of my net worth. And since 2000, when it grew from 50% to 90%. So that's where I am right now. So I feel like, you know what? It's not the right time actually for me to be dollar cost averaging into Bitcoin, right? Actually, right now is a better time for me to build up cash reserves for the foreseeable future. Nothing has changed. We were just early. This is the line I'm focused in on. A breakdown below this trend line over here. Everyone knows it. It connects the April and November high. You then go ahead and just clone it, right? After you clone it, you just bring it down, and you can see very clearly and quickly how that also gives the market structure, where we saw the low in June and July, and then again in January and February, and has since held. And as long as we hold above that, we continue consolidating sideways in an upward sloping channel. If we get a breakdown from this line, at that point, the laser eyes come off. That's a technical breakdown. This was the first technical breakdown. And because other people missed when I was talking about the importance of this breakdown over here, I made sure that it was clear as possible for everyone to know and understand that why I was not selling my spot, because I will only sell spot Bitcoin if I deem it to be at any point in time way overvalued. And I do not at $55,000 on this break of $53,000. The importance of that technical breakdown was made known, just as the breakout of this descending wedge was made known as we began the run up just last July towards that November peak in 69,000. Now, while I wasn't looking for a test of the lower end of the channel, I was just initially looking for a correction, right? A 20% correction that was simply just taking us into, let's take a look at it really quick. I want to make sure I get it right. I like to, and I don't always get things right, but I like to. I want to know what, and let me just see 20% correction. Yeah, that's into that 53,000. Before that breakdown, I was as bullish as you can be. That's a normal 20. That's not a bear market on Bitcoin, a 20% correction. We talked about in traditional markets, the definition of a bear market is when the asset is down 20%. Bitcoin has 20% corrections throughout its bull market runs. This was nothing more until that breakdown of 53 than a normal correction. And in my opinion, looking to test the upper end of this all-time high over here. It didn't happen. Broke down over here, and that's where we are now. Cautiously optimistic, waiting to see if we break down. And at that point, again, laser eyes come off, but there's nothing I would have done any differently than the way I've been executing. We'll continue to do it like that. And that's it. Yeah, so we're going to get into some other stuff right now. So I just want to say thank you for being here. Thanks for watching. If you made it this far, well, at this point, go ahead and leave a comment below. Try to take a look at that. Have a beautiful day, everyone. I will talk to you soon.